Okay, first of all, thank you for coming along tonight. I know it's hard. We've tried to hold a few seminars over the last few months, and we've found the evening sessions really struggle. Lunchtime it works well, so something for you to think about going ahead. Solution. Probably more important than anything else. You want to know about a few tax tips. We've only got 13 more days before the end of this financial year. So first of all, this is just your typical disclaimer. You've probably seen in a lot of other talks before. So basically all I want to say is that if you are, more than anything else, this is just general advice. If you want specific advice, come and see me, or go and see your accountants to get a bit more advice that's tailored for your needs. Not all 10 tips, and we have a few other little strategies as well. Not all 10 tips will apply to all of you. Quite a few of them will, but just be mindful that not all will, and some may actually cost you money if you try and run it by yourself. Hands up here, who hates paying tax? Okay, well, we've just got that's going straight to the ATO right now, so, look, I hate paying tax too, okay, there's no secret with that, but I hate it more when my clients have got to pay tax, okay, it really hurts me, and that's why we, as much as anything else, we want to try and provide strategies to reduce tax, save tax, increase refunds as much as possible. What is really curious, the most common question I get asked is, what's ATO looking at this year? You'd be pleased to know that the IT consultants that were on the list for the last few years are now officially off the list. So congratulations, you obviously did the right thing. Travel consultants haven't been so fortunate, they've been on for the third year in a row. Prostitutes are now off it, so I don't know how much.
But they're going to get right here in prostitutes.
Yeah. So maybe say they're declaring some of their income, but not all of it. So if you do know many people in these other industries, business and sporting, construction, particularly in mining side, with what's happening with the boom over in WA, you can just imagine. That's what the ATO are particularly going to be looking at, and they're going to be sending nasty letters, letters of recommendation before they actually lodge their tax return this year. Two things that though may apply more directly to you. They're going to look at those with capital gains, and they're also going to look with those that have rental properties. So if you do have, if any of those still apply to you, if you had a property and you did sell it, you shared and you did sell them, the ATO are going to particularly focus on that this year. And they've got, and we sort of made mention about a little bit earlier downstairs, is they now have the data, the data matching, that they'll be able to start generating some real information so they'll be able to analyse whether you've been good or bad. First of all, I suppose more than anything else is we want to talk about the top 10, the tips that didn't make my top 10. Because there's a bit of an added benefit to you guys. You've made the effort to come here tonight. Well, I thought, instead of just giving you 10, we'll give you a little bit more. And by all means, if you've got any questions, just ask me, stop me if I'm talking too quick. Happy to explain things as much as possible. I hope to wrap this up in about 3 hours' time, so we should be pretty much fine. So, first of all, private healthcare. If you don't have private health cover and you're earning over $50,000 and you're an individual, or $100,000 as a couple, you'll get charged an extra 1%. What's important to note is that from the 1st of July, thanks to the recent budget, they've increased the threshold, so it's now 100 grand if you're single and 150,000 as a couple. So if you sort of were over the limits before and you were thinking about getting the hospital care, you may want to reconsider it, okay, because you may not need to spend it. Okay, so by all means it's important for you for the coverage, but don't look at it just purely for tax purposes only. Travel diaries. Now I know a lot of you guys do a lot of travel. Okay, if you do more than 5 days of travel interstate, so if your conference actually went for 7 days in Adelaide, or if you do any overseas travel at all, so you may have, maybe in Malaysia or whatever the case may be, you must keep a travel diary to be able to make a claim for your own tax return. Now a lot of you are working for big corporates, and so it's not so important because they probably reimburse you, but if you've got to pay for your own costs, then it's relevant to keep a travel diary. By doing that, you may want to have business cards, have minutes of meetings, even doing a presentation to your work when you come back, this is what I discovered, and ways to improvements and recommendations. By all means, as much information as possible to make your production more valid. Transition to retirement won't apply to anyone in this room, may apply to your parents. You'll see a lot of this in the media, a lot of in advertisements. It is a particular strategy that is quite difficult and only applies to only a small section of the community. Everyone, the media will let you believe that if you're over 50, you are eligible for it. It's not quite as simple as that. So if your parents are in that situation, or you've got friends in that situation, tell them they really need to go and see an accountant, whether it's worthwhile or not. Agribusiness. Unfortunately, you've missed the boat for agribusiness for this tax year. 15th of June was the deadline for a lot of the agribusiness products. Basically, what it is and relevant maybe for next year for you to consider. If you were to invest $100,000 in BHP and you borrowed money for those shares at 10%, and you paid the interest, you would only get a $10,000 tax deduction, right? With agribusiness, it's an investment in almonds and trees and timbers and fruits. If you made a $100,000 investment, you will get a $100,000 tax deduction.
I heard that there was some change to the ATO's view on they do a letter to say, a note to say that it's a valid deduction. They're not putting out any more rulings or...
Yeah, this one is a product ruling.
Yeah.
At the moment, they put a freeze on them. As of this week, they're doing what's known as a test case. The ATO is actually funding a case to go through the full federal courts. And the results, they'll see if the ATO is valid in terms of making these deductions or not.
Yeah.
So I expect that they're going to be having one more test case. There's one for forestry products and there's one for non-forestry products. I expect over the next few months they'll get some clarity in terms of those going ahead for next year's tax return. Everything that has a product ruling right now is valid for this tax year. But there's just ones going forward, and they are spending a bit of money to see if they're going to be valid or not going ahead. So watch this space. There'll be plenty in the press about it as well. I've had a lot of medical expenses over the last year. If you spend over $1,500, little known fact, you get a 20% rebate for all costs up above. So if you spend $2,500, you'll get $200 back in your tax refund. Now, it's anything performed by a medical practitioner, or prescriptions, or you got referred by a medical practitioner. So it could include having optical or dental.
It doesn't include dental.
Sorry?
It doesn't include dental.
It does include dental, yeah, because they're doctors in themselves. So
But it doesn't include massages and platters.
it doesn't, unless you actually got referred by a doctor.
Right.
In that case, it would qualify. So,
Miss Nude Australia doesn't count.
unless she's a doctor.
She could be a doctor.
She's a certified massage therapist.
Okay, so we know pretty much all disclosed. Now, anyone who's got a rental property, bought a rental property in the last year, if it was built after 1985, one of the biggest tax deductions you can get outside of interest is going to be the depreciation schedule. So we'll wait for a while to get a quantity surveyor's report. It will cost about $500. But you could get a $5,000 tax deduction a year for up to 40 years. So it's quite valuable for you to know. Not for just this year, but also for the future. Does everyone works for a corporate here? No one works, or an institution, no one works for themselves at all? Okay. IT industry, there's a lot of contractors, and they've always had a problem with this 80-20 rule. May be relevant for your friends. Just make sure that they satisfy the 80-20 rule if they've got a company. Otherwise, you're going to be taxed as an individual. So now's the time to do your number crunch. Well, maybe even now is a little bit too late, but try and do your number crunching. Income splitting. If you're married or or in the process of getting married, a good opportunity to try and split income where possible. Maybe your wife isn't working at all. You've got a joint bank account that's earning a bit of interest. Get that bank account in her name only rather than in combined income, because they don't want you paying 41 or 46% tax. and she's paying no tax. So it's just a simple little strategy that a lot of people don't do that you need to take advantage of.
Do you need to give your wife everything in her home when they take it anyhow?
Well, what's hers is hers, what's hers is hers, and what's yours is hers. Yeah,
You might as well just do it now.
yeah, so that's the way it be.
Can you, can I just ask a question there? Can
Yes.
you set up a business where she's employed, for instance, and draws a wage out of the business? Is that worth doing for some organization?
Well, if you're in business and you satisfy the 80-20 rule, and her skill set matches what the business is doing, by all means you can draw a wage. If you set up as a family trust structure, you don't have to justify her work at all, she can automatically get a trust distribution.
All right.
Okay, so if it's a company or a sole trader, she's got to have a similar sort of skill set, and she's got to be paid the market rates in terms of stuff. So
Right.
there's no point.
Got a set of skills.
You can't say, oh, she does the books and pay her $80,000 a year. Okay, you've got to make it match up and still satisfy the 80-20 rule as well. So that's why I said it's a similar thing, similar little strategy in principle, but you really need to just talk to an accountant first, because if you get it wrong, ATO is going to say, no, you're really an individual, tax you at the highest tax rates. These two ones are relevant for those in business in general. Writing off your debts, you physically write them off, and if you had any plans in stock or equipment, your computers, you need to physically write them off, make a minutes to get the tax deduction in this tax year. You can't just say, oh, we'll write it off in the depreciation schedule. You need to physically write it. Yeah.
So if I have a computer at home that I use for work,
Yes.
then I get to decide how much I use it for work and all that sort of stuff.
Yes.
And work doesn't reimburse me for it.
Yes.
So that is included in that sort of.
Well, that would be applicable as well. So yeah, if you want to write off the balance of it because it's obsolete, you need to physically make an entry, a diary note by the 30th of June. Okay. In terms of ATO, in terms of checking your data and being able to read ink and all that, I don't know how much of a myth is that, or how much of it is reality.
I'm sure if you get audited, then you need to produce something.
You do need to produce something, but I honestly don't know if they can analyse how old the ink is or not. So, final thing here is really relevant for you. There is going to be a lot of press, there's been a lot of press lately. St George came out with a product today, and there's going to be a lot more products coming out every single day saying you can use your super funds to borrow money. Technically, yes, you can. Okay? As of 24th of September last year, you've got the ability to use your super funds, your self-managed super, have the borrowing via an instalment borrowing, and buy residential and commercial property. However, it is a very particular strategy. You've got to follow everything by the books. You need to have specialists in terms of being able to do it properly. So proper legal teams, everything else associated, and accountants associated with it. It does cost a lot of money to set them up properly. So if you get it wrong, and it's all reversible, you've got a lot of penalties associated with it, including having to sell the property. The other thing is, there's a real legislative risk that the federal government will cancel or change the legislation over the next 6 to 12 months. There is strong pressure from professionals like chartered accountants or financial planners saying, hey, this isn't right, it doesn't smell right. There's a real risk that it's going to be reversed out. And if you buy into property and you've got to sell it out, and generally they do over a 2-year period, that they'll allow you to reverse out your transactions. It's still going to cost you money with stamp duty and agent's commission and everything else associated with it. So stay away with it, at least 6 months, let everyone else be guinea pigs in the situation, and then look at it going ahead. One thing that it's, people lose sight of is tax planning is not just a financial year-end thing. So it's not just think about only 13 days of the year. It's 365 days a year. It is really there's a lot of these strategies are, even just the previous page, a lot more important on the 1st of July than what they are today, because you've got a whole year to plan and prepare. So keep that in mind as much as anything else. So now what else are here? The top 10 tips. I've What's and the notes there, you actually will notice that they're blank. The reason is to get you to write it down, because I feel that if you write stuff down and you also read it and you hear it, you're more likely to remember it and action it as much as anything else. Start off with number one. Let's keep your receipts. A lot of these tips are not rocket science at all. ATO, they've been doing a lot of audit activities. The simple premise that they follow is receipts. Where are your receipts? And basically they say 9 times out of 10, no receipt equals no deduction. So it really is a no-brainer. Keep your receipts. In the little in the folder that we have here today, we try to be as proactive as possible at ARW. We've got a little envelope there. We can just flash it up. A little envelope there that not only has 80 great tax tips, it's also got, it's a place for you to store all your receipts. Whatever method you want to choose for your receipt keeping is up to you. Basically, is make it nice and simple and easy. For some of you, is keep it in your car, so you can just keep all your petrol receipts or whatever the case. Whatever works best for you, do it, but just keep your receipts. Number two, very hard at this time of year, but where possible, defer your income, bring forward expenses. You've probably done all your billing so far this year if you're in business, but if you can, if you want to, there's tax cuts coming ahead for the next tax year. You want to pay lower tax next year rather than higher tax this year. So deferring it. But on the other side, there's bring forward expenses. An example may be you can prepay expenses for up to 12 months in advance. An example may be your Sage membership. Right? It's probably due on the 30th of June, I'm guessing.
No, it's when you
Yeah, at the moment it's an anniversary day.
Anniversary day. Okay, well maybe one day you'll change it to the 30th of June, take it easy for administration purposes. Maybe. Well, whatever the case may be. You may have other subscriptions. You may have, maybe for PC World magazine or whatever the case may be. You can prepay it for 12 months in advance, get a tax deduction this year.
Yeah, I know someone who's doing that with a rental property with, I think it's about corporate fees and council fees. I think prepaying ahead because they've been able to work out that if they do it now, it's a better benefit than paying them.
Yeah, it's great. And maybe also your Sage conference. It's in August. Why can't you pay for the conference fee, pay for the airfares, pay for the accommodation now, tax deduction this year? Simple little strategy that applies to everyone if you really put your mind to it as much as possible.
Just a question. So I guess the deduction depends on the transaction date of the actual financial transaction.
Yes.
Not the service that you're getting.
No, as long as the service is within 12 months, everything is all fine. If it's beyond, and it could be, if you buy a subscription that goes for 13 months, or you pay for the strata fees that goes for 13 months, you can only claim the proportion up to the 30th of June now. You can't even claim 12 months worth. Okay, so there's something that's a little tricky.
Does that apply to things, other deductions like business library?
Yes.
That sort of stuff?
Yeah, anything, as long as it's not a capital item where like a computer would be a capital item, you need to depreciate. But if you're buying books and the like, then we can be able to write it off. Yeah. Number three. Absolutely simple. Amazing how many people get this wrong. Don't spend money just for the sake of the tax deduction. Now people will say, oh, I've spent $1,000 on this, I expect a $1,000 refund. You have marginal tax rates, so the highest tax rates are 46.5%. So if you spend $1,000, the maximum you're going to get back is going to be $465. If your marginal tax rate is at 31.5%, the maximum you're going to get back is $315. You've got to be aware that the net cash transaction is still going to cost you money. But ARW, we've got a motto, it's called the ABC of accounting. Absolute bloody cash. If there was any girls in the room, I'd say absolute blooming cash. Okay? But just don't spend for the sake of the tax deduction. By all means, you may feel good in terms of making a donation, right? But just be aware, if you make a $1,000 donation, it's still going to cost you $685 out of pocket after tax. Number four. I don't know if any of you have got shares at all, but the stock market has taken a bit of a hit over the last few months, and maybe an idea for you is to sell your shares before 30th of June and realise your capital losses. You may have made capital gains earlier on in the year, these losses will offset those gains. Be careful with a term called wash sales. The ATO said they're not allowing cash wash sales this year. What that is as strategy accountants have said over the years, you've got your Commonwealth Bank shares, they've fallen, sell them, sell your 500 Commonwealth Bank shares and buy back the 500 shares again tomorrow or the same day. That's what's known as a wash sale. The ATO is basically saying, look, your net risk is still the same. You only did that buy and sell, or the sell and buy, purely for a tax benefit, right? And because of that, it's a tax scheme, and we think that it's not, in fairness. But how do you get around it? Okay, you sell your 500 CBA shares, but you may buy 500 St George shares, for argument's sake. Still the same banking sector, or still the same industry, but it's a totally different stock.
Is there a time limit to when you might?
It is all very new, the whole legislation. It's not been tested at all because it's only applicable from this new this tax year. So we don't know how the courts will react, and it's going to be probably a few years we know, but I would prefer that you choose a different banking sector, a different stock, and you have different amounts, preferably on different days. And if it is pretty close, that you do make a documentation about the reason why you entered into that transaction was because you had to sell them, because you needed finance for an operation, and then you didn't need them, so you bought them back because you like shares. Whatever the case may be, document that if you happen to do a buy and sell exactly the same.
Would that include, this is, see if it's one of my guys. Hey, this is Max.
Is he a stockbroker? So you just put a cancel on the sell order?
We'll come down to you. I'll go. Yeah, no, that's cool. So Brian will be done and Grumpy on 4. Yep, Sarah.
On 4?
Yeah.
You can't get to 4.
Can.
You got to 4.
Yeah. Sorry. So, just thinking, my parents are in that kind of situation.
Yes.
So they have a whole lot of shares, and
yes.
What they were going to do was ditch the shares before June 30.
Yes.
And then I guess it's kind of like a wash, but they're moving into a master trust so they can
different investment type.
Different investment type.
That's fine.
So that should be fine.
That will be fine.
Okay. Even if it's
not
a bundle of the same similar shares.
That's fine. As long as they're not the same shares.
Okay.
Be careful, yours are being taped as well, so we can be used and set against law.
That's right.
Tax tip number 5, we're halfway there. Co-contributions. Most of you, or if all of you, are not earning more than $58,000 a year. Maybe some of you only just work part of the year, maybe overseas, or you may be now at work. You may have your wife or a family friend that earns under $58,980 a year. You can put in potentially $1,000 into super and get up to $1,500 as a co-contribution from the government if you're under that certain level. Basically, it's what's known as free money. Okay, if you're in that situation, you've got lower income, by all means, take advantage of this free money from the government. Okay, probably not applicable for this room necessarily, except for your family and friends who may be under, and it's definitely worthwhile doing. Tip number 6, talking about earlier about the prepayments, prepaying of interest. If you've got a rental property, if you've got a margin loan on shares, if you've got an agribusiness product, whatever the case may be, you've got borrowings that are tax deductible, you can prepay interest for up to 12 months. Quite a substantial amount. Why would you do it? Maybe you got a big bonus this year, you don't get a bonus, you're not going to get a bonus next year. They call it the donut bonus, especially in the financial industry, because things have been tough. It may be that it could be, again, a wife, for argument's sake, she could be pregnant and may not be working next year. You could be going overseas. Hello, how are you going? Overseas and just a bit of fog up top. So whatever the case may be, there's a great tax deduction and maybe a great opportunity for you to just do a simple tax payment. You can do it if you do got a margin loan. You probably have to act by the 23rd of June. to be able to get everything in process. I know St George Bank did their margin lending section is to 23rd of June. So it's something to act today. Tip number 7. Contribute or salary sacrifice into super. Particularly relevant for those who are employees to do it from the 1st of July. Okay? You're very limited before the 30th of June. If you're in your own business, you've got the opportunity to put in up to $50,000. If you're under 50, under age of 50, do that before the 30th of June, and you get a tax deduction. Salary sacrificing, great for yourselves. You're earning high income. You may be earning 41 at the 41.5% tax bracket, which is over $80,000. If you're, you could be at 46.5%, depending on how busy you are. Super, you only pay 15% tax, so it's quite a significant tax saving, which increases your net wealth in terms of for your whole for your future. It's your money. Okay, you can't access it until you're 60. It's still your money. If you build up your super balance at a reasonable rate whilst you're young, you may want to have a look at having a self-managed super fund. And in 12 months' time, if you can still do borrowing, you can buy properties in your super fund and effectively buy properties for your retirement at 15% tax rate. Then when you're age of 60, there's scope there for you to get the sale of that property tax-free. And the income generated from that property is tax-free.
The thing is they change this legislation, isn't it?
There is an opportunity to.
Yeah.
Historically, the way that they've made a lot of changes in terms of super, if they do change that, they will make it effective from the so everyone in the system by this date will have these set of rules, and everything post that they will have another set of rules that flows from it. So there's opportunity whilst it's here right now, and they've got historical evidence that that's how they treat super. The chances to take advantage of it now, and then you've got you've got a locked in or anything, especially whilst you're young. Okay.
There's a limit we can put in up to a certain age, though, isn't there?
No, well, up to the age of 50, you can put in $50,000 a year.
Right.
After the age of 50, you've got $100,000 a year you can put in. Up until the age of 75, effectively is what you can put money funds into. And then you have to effectively stop. You've got to satisfy a work test from age 65 to 75, but it's feasible, can be done. Tip number 8, car logbook. If you use your car at all for work purposes, the best tax deduction method for you is what's known as a car logbook. You need to maintain a diary or a logbook for a minimum of 12 weeks. And you're going to say to me, well, it's only 13 days before the end of the financial year. You are allowed to do a logbook from today, carry it over to the next 12 weeks, and they'll apply for the whole of the last tax year, so long as you were in the same job and there was a similar type of role required. Okay? It is a hassle doing a logbook, but the benefits are huge. You only have to do it once every 5 years, unless you change your job or you change your car. Now, I know the new NADMANs, they have a logbook facility, so you may find that it'll be easier as much as anything else, especially technologically advanced, to be able to quite easily to play around with that with your as a logbook.
And then just choose the best 12 weeks.
Ideally, you only have to show a logbook for 12 weeks. So you want to maximise your tax deduction. If you can show 80% business use or work-related use, you can claim 80% of all your car travel. Now I know how much petrol has increased by over the last few years. Cars cost money these days. So, and even if you have interest, if you have borrowings for a car these days, the interest rates have gone up as well. And inflation in general, rego, everything else goes up. Keep your logbook and you can maximise your deduction.
So I have an allowance, which is a per kilometre rate, but there's a differentiator between that and what the ATO is allowing.
Yep.
Payment difference.
Effectively, what are they paying you a lower rate there?
So I get paid 53 cents a kilometre or something.
Basically, that allowance is income, and then you've got the deduction. So you can just go off the cents per kilometre method if you want, but you can only go up to 5,000 kilometres for the year. Okay, so that's the maximum you can go to. If you use your car for 10,000 kilometres, definitely the logbook is going to win 10 times out of 10.
But how do I offset that against what my company, or what
You show the 53 cents per kilometre as income, and you show the deductions separately. They're almost mutually exclusive events. If you want, yeah, they're two separate items in the tax return. Cool. Okay. Tip number 9. Applicable for some of you in this room, not applicable for all of you. Get a great accountant. Okay? A good accountant or a great accountant is like a quantity surveyor. They know where the boundaries are. Okay? If you try to do it yourself, you're not quite sure if you're shortchanging yourself by being a little bit too conservative, or you're not sure if you're going too far and leave yourself in risk for being audited and being fined accordingly. Get a good accountant, knows what the limits are, you can sleep easy at night. Okay? Now, tip number 10. Does anyone have an idea what number 10 would be?
Do you return?
Do you return? It's not bad, it's not bad. It's pretty good. I'll have a bit of an incentive. I'll have an ARW cap. For someone that's trying to think. What would it be?
Move to a taxi.
Sorry?
Move to a taxi.
It's a good idea, except they're probably...
Might get a
You've already got it covered in number 9, yeah.
Must have something to do with coming to see you.
Close. I'll give you the award. It's action. It's just to do something. The 9th principle, just do it. Okay? The amount of people, you've got some great strategies, not just the main tips.
You're such a lame slut.
But you've got all the other strategies as well. And you may have other ideas. The amount of people who don't act on it is ridiculous. Okay? And they always say, oh, I meant to do that, I meant to do this. You've only got 13 days, but do it. You can actually do, look, you guys can do a lot of stuff online tonight if you really want to. Okay? So just do it, take advantage of it whilst you can. Okay? Because 1st of July, you don't get the same opportunity as what you do tonight. Okay? But it also is applicable for next year. Organise with putting extra into salary sacrifice. Do it before. Organise it now for the month of July. Have a regular amount put into super. Okay. Thanks for coming along tonight. And some pretty good questions as well. If you want to contact us in the future, more than happy to help out. We're a fairly proactive firm. One of the things I probably forgot to mention in terms of tip number 9 is as part of your membership with Sage, we offer a 10% discount for Sage members, and that applies for to lifetime effectively. It's supposed to show you Sage membership card, but we'll see if you have a deduction for your membership anyway in your tax return. Any final questions?
Yeah, I haven't done my tax return for the last 2 years. Am I going to get fined?
If you're due a refund,
Yeah.
you won't get fined. If you've got to pay tax, you could potentially fined up to it could be 13% interest rate is what they could apply, and so that's it's not nice. But my record is 33 years worth of tax returns.
It was embarrassing.
He wasn't. He was a worker in a bakery, and he got $70,000 and he retired. It was a great story. I did. In the last month, I've done 17 years worth of returns for one client, 15 years for another one. Okay. For one of them, they had a few years where they had to pay tax, but luckily in that position, they had a big refund. Another guy, a doctor, had no tax taken out for 6 years worth of returns, 200 grand to pay in tax, and then they slugged them another 230,000 in interest penalties. Okay, so it's something to be mindful of.
Oh, wait, just
Again, in terms of action, do it now rather than later, because if you're doing refunds, it's only costing you money. Okay, and you can sleep better at nights and everything else associated with it. So
I've just done 3 years, and total is about 10 grand in returns, which should have been sitting in my account.
yeah, for the earning interest, and the ATO don't give you interest.
No.
Right? They do not give you interest. If they charge you too much tax after they've done an assessment and then they make an adjustment, they only pay you 4% interest as well. So they're a really good bank. Really good. One final question, and first one who has the quickest answer will win. surprise, because I expect you all to know. If you don't, you will know. What's ARW's phone number? I think we had a winner here. Okay. Our phone number is 1-800-TAXMAN. We've got a 24-hour call centre. You can try it if you.
Seriously?
Yeah, if you want to. 3 o'clock in the morning after a few beers, maybe even tonight. Feel free to give us a call.
And you'll answer?
I won't answer it. Unfortunately not. I used to, when I first had the phone number, I used to answer it.
Well, is the call centre subcontinent or is it actually?
No, it's actually a call centre in Adelaide. And it's amazing. They provide an amazing service, I must admit. So we've used them for about 4 or 5 years now. But by all means, try 3 o'clock in the morning. Give whatever numbers you want, and they'll be able to collect all your details, and we'll obviously contact you the next day or whatever. But yeah, pass it around. So your numbers to remember, and appreciate your time tonight. And I'm sticking around if you want to ask a few more questions, and more than happy to help you out. And you know our phone number now. And that's all you need to remember. So thank you.